Rocket companies. If you watch my video talking about stocks that I'm watching this month, Rocket Company is one of them. So in today's video, I will explain everything I know as of today about this company, their financials, their stock price, everything. Please smash that like button and subscribe since it really helps my channel out. Also, if you haven't signed up with We Will Yet, make sure to do it and claim your 2 free stocks after depositing $100, which you will be able to withdraw later on. So it's basically free money. The link for that is down in the description below. Rocket Companies is a holding company that has a few different businesses, starting with the ones under Rocket Mortgages by Quicken Loans, such as Amrock, Rocket Homes, For Sale by Owner, and more. They also have Rocket Auto, Rocket Loans, Lendesk, and Edison Financial. Rocket Company, in my opinion, is a very well-diversified business with all those brands. Now, Rocket Mortgage is the larger mortgage lender here in the US, and it provides industry-leading real estate, mortgage, and financial services. What differentiates Rocket Mortgages from any other mortgage lender is their technology, their simplicity, and innovative business. We all know that the process for a mortgage with banks is pretty tedious, very long, and with tons and tons of paperwork. Plus, it takes a lot of time to finish the process. Rocket companies are trying to change all that by implementing technology in a way to make the process faster and easier for everyone. We all know that the newer generations like me prefer everything through technology instead of doing it like the old days with the amount of paperwork. So in my opinion, Rocket Mortgages are definitely beneficial and would not surprise me if they are able to increase their market share even faster due to the fact that younger generations will always try to go with the easier, faster, and most innovative way. Something that impressed me the most is that in 2019, they closed 6.7 loans per month per average production team member, while in the industry average is 2.3 loans per team member per month. Now, this year 2020, they have improved quite a lot, and now year to date, their average is 8.3 loans per team member per month. As you can see, their market share has been increasing year over year, and right now they own about 7% of mortgage market share due to a big boost last year. Also, customers have a higher tendency to stay with Rocket Mortgages than switch to another company. As you can see, their refinancing retention is at 76%, while the industry is at 22%, meaning that Rocket Mortgages are 3.5 times better than the industry average. In my opinion, this makes the company more valuable because it means that they are able to retain business way better than their competition, meaning that maybe clients have way better experience with Rocket Mortgages than any other company. Their website visitors are also exponentially increasing year over year at a very rapid pace. As you can see, between 2018 and 2019, it increased 24%. Now, Rocket Companies is trading at a price of $23.49 per share and has a market cap of $46.6 billion. They reported a total revenue of $5.037 billion, which is a huge growth of 437% year over year, which includes the gains on sales of loans and the loan services losses. Basically, how they make money is by issuing the loans to people and then selling those loans to the second market to Fannie Mae, Freddie Mac, and Ginnie Mae, which are institutions backed up by the government to support American people. Also, all the loans outside those 3 companies that I just mentioned and the guidelines of FHA loans, USDA, and VA loans are sold to private investors and mortgage conduits. On their balance sheet, we can see that they have $28.86 billion in total assets, which $1.7 billion is in cash and cash equivalents, and their highest assets are their mortgage loans held for sale, which count for $17.6 billion. They have total liabilities of $23.3 billion, which their total liability to asset ratio is 0.8, which if you ask me, it's pretty high. But if they continue with this type of growth quarter over quarter and year over year, they should be more than fine. Yesterday, they announced that they were going to issue more debt through their senior notes due on 2029 and 2031. At the beginning of the day, they said that they were going to only issue $1.25 billion, but later in the day, they ended reporting once again that they will not issue $1.25 billion. Instead, they were going to issue only $2 billion. They expect to use the net proceeds from the offering along with the cash in hand to redeem all of its outstanding $1.25 billion aggregate principal amount of 5.75% senior notes due in 2025 and pay any related fees and expenses. Basically, what this says is that they are going to use this new debt plus the cash that they have available to pay a debt that it was due in 2025 and any fees and expenses. In my opinion, if interest rates continue decreasing over time, it wouldn't surprise me that they might continue refinancing this debt. Now, why should we invest in this company? They offer very simple explanations here, starting with the accelerating market opportunity. Also, they have built an unparalleled digital-first brand, which provides simple, fast, and trusted digital solutions for complex personal transactions. They are also constantly innovating their business by investing in technology to be able to disrupt such a huge and very old industry. Also, their growth prospect is massive since their client retention is way better than the industry. They are taking a tech approach when doing business to offer their services to customers. The whole process of paperwork and fees is always a headache, and Rocket companies or Rocket mortgages offer a good digital process to make it easier and faster to customers, and that is what differentiates them from the competitors. As I said, they also offer real estate services under their business called Rocket Homes, which is something like Zillow that helps people find their dream house, and then with the same Rocket mortgage, they do the mortgage process, all under the same umbrella of services of Rocket companies. Obviously, we all have seen how the real estate market and the mortgage market has been moving quite a lot since interest rates are really low. As we are still in the pandemic, people are still required to work from home and kids to see online classes. A lot of people are trying and taking advantage of the situation with low interest rates to move to a bigger house or a more comfortable one. Here in Miami, for example, we're seeing a lot of people moving from brickle, which are the buildings, to a house, mostly to be more comfortable and have more space. As the insurance industry, the mortgage industry hasn't been disrupted in years and years since they are all very strong and old industries. In my opinion, this could be an excellent opportunity for Rocket Mortgages to innovate the industry with their technology and little by little grow their market share, being able to disrupt the whole industry. Obviously, their competitors are huge and strong since we are talking about the United States Bank, and they have been in the business for years as well, but we all have seen that if a growth and disruptive company takes the correct decisions with huge technology and continues innovating at a faster pace than the rest, then they could easily have bigger market share than the biggest players. Now, in my opinion, this is a well-established company and it is a large business that they are already executing and have been executing for years an excellent service. Currently, I do not own any Rocket company shares, but wanted to give you guys my opinion since I'm very interested in this company. I think that this is a very innovative and growth company that with time and technology could gain more and more market share and grow a lot. Even more if people decide to stick with them for new loans or refinance instead of going with other companies, since that could boost their retention rate. I think that the current price for the stock is going to be a very good investment for the long term, in my opinion. Even though the company was founded years and years ago, they went public about a month ago, and we could see a lot of volatility in the coming months. Also, they have a lockup period of 180 days, meaning that it will end around February, and I would expect to see even more volatility by that time. Still, it impressed me that insiders are actually buying more shares, which tells me that they see it as a good investment at this price, plus that they are not looking to sell anytime soon, nor after the lockup period. Will I invest in this company? I do think I will. As I said in my last list of stocks to watch this month, I haven't started any position yet because I invested in other stocks during the correction that we just had, and also wanted to investigate a little bit more about this company, but I think that they are very innovative and with huge technology they will be able to disrupt the industry. Let me know in the comment section below what you think about this company. Are you investing in it? If you have, what is your average cost? Also remember that I have a completely free Discord group chat, which the link for that is down below in the description if you're interested to join. Thank you and see you next time. They expect to use the